we aim for 2 ETFs, one for growth and capital appreciation, the other for income and dividends. Growth ETFs help expand your capital base, while income ETFs provide cash flow today through dividends. Over time, reinvesting income ETF distributions can lead to compounding growth and increased income. Let's run a model. Starting with $500,000, allocate 70% to growth ETF and 30% to income ETF. In year 1, with a 5% yield on the income side, you could collect $7,500, while growth compounds. Discipline is key. Avoid panic selling, chase yields wisely, and keep fees low for sustainable growth. A first thing to emphasize is diversification even within these 2 ETFs. You don't want both ETFs to be concentrated in one sector or region. The growth ETF should ideally be broad: U.S. equities, global equities, or total market ETFs. The income ETF should give you exposure to stable dividend payers, not over-concentrated in high-risk junk bonds. You want stability in yield, not lottery tickets. Another critical point is rebalancing. Over time, your growth ETF will outperform and your allocation drifts. Rebalancing once or twice a year ensures you stay in your target mix and reinforces the yield side gradually. Let's talk tax efficiency. This is crucial because high yield and dividends are taxed differently in many jurisdictions. Look for ETFs that are friendly in your country, minimized withholding, qualified dividend status, or tax-advantaged wrappers. If your ETFs charge 0.5% or 0.7%, that eats into your net yield drastically. Aim for expense ratios in the 0.1% to 0.2% range for better returns. If you're adding extra capital regularly, such as monthly contributions and reinvesting dividends, your investment path accelerates significantly. One investor started with $200,000 and over 15 years turned it into a higher distribution income than his former salary. Risk is real. Growth ETFs can crash in bear markets, and yield ETFs may cut dividends. Understand how to mitigate these risks. Hold some cash buffer, avoid leverage, and accept drawdowns as opportunities to reinvest. Adjust your strategy when necessary. Don't commit your entire income from yield immediately. When yield income reaches $10,000 per month, live on $5,000 and reinvest the rest. Avoid chasing exotic yield funds unless you fully understand the sector. High yield often comes with high volatility. Stick with diversified, reliable sources of income. A shaky yield crashing defeats the purpose of stability. Start with $500,000 in year 1. Allocate 70% to growth and 30% to income. Suppose growth compounds at 8% and yield at 5%. By year 20, your portfolio might be worth $2 to $3 million, yielding $100,000 to $150,000 annually, realistic for monthly incomes of $17,000 with proper withdrawals. The path isn't smooth. Recessions and market crashes will happen. Many panic and abandon the plan right before recoveries. The difference between success and failure is trusting your allocation and using rebalancing to buy low. It's smart to have exit strategies in mind. Shift toward more conservative ETFs when yield income crosses a threshold. Maintain a defensive bucket in short-term bonds or cash to protect capital in rough markets. Focus on income stability over aggressive growth. A common pitfall is psychological. Passive income may not feel like earned money. Mental reframing is key to accepting it as real. You must respect your passive income. Track it, manage it, and reinvest part of it. Treat it as sacred, and your mindset will shift. A friend's journey. He built his 2 ETF portfolio over 18 years, starting small in his 30s and never pulling yield until age 48. At $8,000 per month yield, he reduced his work to part-time, and within 2 years, he left his job to live off his passive income. An investor in Brazil used a U.S. growth ETF and a global high dividend ETF, starting with modest savings that compounded over time. He survived local currency crashes due to global diversification. His income grew, and he scaled back his consulting work. Consistent investing beats sudden gains. Staying power and dependable yield are vital. Avoid overextending. If you're thinking where to start, here's your roadmap. Step 1. Analyze savings. Decide on current allocation. Even 10% is a start. Step 2. Choose 2 ETFs, one for growth and one for income. Research their performance and fees. Step 3. Allocate according to risk tolerance. Maybe start with 70-30 or 60-40. Step 4. Reinvest everything until yield is substantial. Don't withdraw too soon. Step 5. Contribute regularly, monthly or quarterly. Treat it as a habit. Step 6. Rebalance periodically. Sell overperforming portions and rebuy underweighted parts. Step 7. Gradually shift living expenses to yield, ensuring a buffer. Step 8. Monitor taxes, fees, yield sustainability, and credit risk. Adjust as needed. Step 9. Stay the course through market storms. Use downturns as opportunities. Step 10. Celebrate milestones, but don't stop investing extra to fortify your foundation. A 2 ETF portfolio doesn't just replace your job, it frees you from needing a job. That's financial sovereignty. Most people don't fail at investing because of lack of money. They fail because they don't understand time and psychology. It's about discipline, data, and mindset, treating it seriously instead of a lottery ticket. If you're expecting this 2 ETF portfolio to make you a millionaire overnight, think again. With consistent contributions, reinvested dividends, and zero emotional panic, you establish a powerful income stream. Suppose you invest $1,000 a month into this 2 ETF portfolio over 10 years with average returns of 9% compounded. That's $190,000, $210,000 in value. Push it to 15 years, you're sitting on over $370,000. If you let those dividends reinvest, you're feeding the engine instead of draining it. People hear ETF portfolio and think it's for my dad's retirement plan. But the modern ETF landscape is dynamic and purposeful. Today, ETFs are designed for high dividends, growth, global exposure, or income. Combining just 2 well-chosen ETFs can be strategically aggressive. Every millionaire investor views downturns as discounts, not disasters. The smart investor buys more when prices drop. Set your brokerage account to automatically invest a fixed amount every month. Don't wait for the perfect entry point. Just automate it. This strategy, called dollar cost averaging, smooths out your cost basis and removes decision fatigue. You'll be surprised how much mental energy you save once investing becomes just another line item in your budget. Turn on your dividend reinvestment plan, DRIP. You'll automatically buy more shares each time dividends hit your account. When you begin consistently investing, you start thinking differently about time. You stop chasing instant gratification. You begin seeing opportunities where others see chaos. That's the true mental shift from an employee mindset to an investor mindset. There's something liberating about knowing that your money is working harder than you are. Your ETFs generating more income than your paycheck changes everything. When your ETFs start exceeding your income, you stop needing your job. You start choosing it. That's financial and emotional independence. Taxes are critical in ETF investing. In the US, ETFs are tax efficient due to the in-kind redemption process. Qualified dividends from ETFs can be taxed at lower rates than regular income. This means more money in your pocket without doing anything extra. Meet Sarah, 35, making $65,000. She automates $1,500 monthly into a 2 ETF portfolio, ignoring the market noise. 15 years later, her portfolio is worth over $520,000, generating $20,000 annually. Her time is finally her own. Imagine her portfolio growing to $1.2 million. Annual dividend yield? Around $45,000. That's almost $4,000 per month. Passive income. If she reinvests those dividends for 5 years, she could reach $17,000 per month by her early 60s. No six-figure salary needed. Diversification matters. 2 ETFs can hold hundreds of companies. SCHD has dividend giants like PepsiCo. QQQM includes tech leaders like Apple. Change your mindset. Stop chasing consumption. Start chasing ownership. Ask, how can my investments pay for this? Real investing can be boring. It's about small, incremental growth over time. Your dividend income rising year after year. Now let's take a quick look at the emotional side again, because it matters more than most people admit. Fear destroys more wealth than market crashes ever could. The ones who win are those who stay. This portfolio isn't just a financial plan. It's a personal transformation plan. 2 ETFs, one focused on dividends and stability, the other on growth and innovation. Automated investments every month. Open that brokerage account today. Set your first auto deposit. Buy your first ETF shares. Money isn't just numbers in a brokerage account. It's stored potential energy. Every dollar invested represents future freedom, options, and peace. When you build this 2 ETF portfolio, you're not chasing wealth. You're designing a lifestyle that's sustainable, scalable, and stress-free. Imagine making life decisions without worrying about your next paycheck. That's what true wealth feels like. You don't have to be perfect. There will be months when you can't invest as much, or when markets dip. Stay in the game. Every contribution, every reinvested dividend, every decision to hold instead of sell, it all compounds. What feels small today will feel monumental 10 years from now. That's how compound interest sneaks up on you. This journey isn't about beating the market. It's about building momentum. Once you start, the portfolio begins to move under its own power. At some point, the line between investor and earner blurs. You realize that money has started working for you, even when you're sleeping. That's when the shift happens. You stop chasing opportunity and start creating it. Wealth isn't the destination. It's the foundation for everything else you'll build. If you're serious about building income, keep it simple. 2 excellent ETFs, a sound strategy, steady contributions, and mental resilience. Don't chase gimmicks or over-diversify into distraction. Focus on building momentum. Share this video with someone who dreams of financial freedom. Comment below, where are you on your path? If you want me to break down exact ETF picks for 2025, hit that like, subscribe, and ring the bell. Imagine waking up and seeing $17,000 deposited, not from your job, but from dividends and growth of 2 ETFs. With the right strategy, discipline, and patience, that dream is not impossible. It's a goal within reach. Today, I'll show you how a 2 ETF portfolio could replace a full-time salary. Learn how to manage it effectively. Many work for decades, hoping their investments will carry them. What if you flipped that timeline? I'm not promising $17,000 a month next year. It requires capital, time, and consistency. But with the right 2 ETFs, you can get there. The magic happens when growth and yield amplify each other over time.